So let's get started. Let's start off with introductions. I mean, for me, you are a superhero. You are brilliant. You are a bomb. You are a business owner. I might be a stan, just a little bit, but how about you introduce yourself?
So my name is Keila Hill-Trawick. I am the owner, founder, and principal of Little Fish Accounting, where we do accounting, bookkeeping, and tax services for what I call the smallest of small businesses. So solopreneurs or sole proprietors, partnerships, really small LLCs. We like to take care of people who would not have otherwise either had access to accountant or known that an accountant was available for them to be able to take advantage of that guidance.
Let's just start talking about kind of your money philosophy and why accounting services are so important for those little fish that you mentioned.
So I actually had a conversation with someone yesterday in talking about how a lot of people that I know, a lot of clients, a lot of friends that are building businesses, like the business side is not the first thing. So I have a lot of creatives as friends and as clients who are like, I'm just trying to make this thing, whatever that thing is that you do, whether it's video, photography, art, in its myriad of ways that it shows up in the world. It's like, I want to do that thing. And I'm like, yeah, but then you want to make money from that thing. And when you make money from that thing, the IRS and the state are like, cool, because you have a responsibility once you start making that money to pay us something. And I think that a lot of times those things come later and later in the process because, as we know, as small business owners, you're doing so much stuff that you're like, I'm just trying to keep the business going. I'm trying to make sure that y'all can find me. Maybe that's your social media. I'm trying to make sure you can buy my stuff. So maybe that's my website. Like the after effect, I'll deal with that when it comes. And as the pandemic is making ever more evident, you need to be prepared so that you're not in a rush.
I had a blog post recently where I talked about how my side hustles last year helped me to earn $36,000 in additional income. And one of the things I said was, if you were depending on that side hustle, then chances are you might be underemployed and it might be time to make a career shift.
Yes.
I've used it as a way as well to itemize my deductions from my taxes.
Yeah.
Can you talk about that a bit? Because I think when you are a middle income earner, the government comes for us first.
Man, every time. So one of the things that being a small business owner, having a side hustle or passion project or whatever you want to call it, gives you access to our deductible expenses. And what that means is there are items that you can pay for your business, to run your business, to make your business better, that essentially bring down your taxable income. So on the one hand, you want to think about that. Obviously, if you make more in your taxable, in your side hustle than you deduct, then you just added more income to be taxed to yourself. But you don't get taxed on all of it. So that's the benefit. If you make $36,000 and you spend $20,000 in deductible expenses, you're only taxed on the remaining 16. And so that helps to reduce, if you're going to make extra money, the amount that they're taxing you on. The other part of that is, let's say you're starting a business and for the first year, 2 years, however long it takes, you're actually losing money, meaning that you're making more money. You're spending more money than you're making. You can offset your main income source and reduce that taxable income. So numbers, you're making $50,000 a year, and you ended up overspending $5,000 on your business. So you have a loss of $5,000. You're going to apply that to the $50,000 that you made at your job, and now you're only going to be taxed off $45,000. So it's not ideal cash flow wise, because obviously you'd rather have the $5,000 than lose it. But it's something to keep in mind if you have a business and you're spending those expenses. The silver lining of it is it could reduce your taxable income at the end of the year.
So someone said, if you haven't filed taxes in the last 2 years, will you still get the stimulus? And I was about to go into COVID-19, so that's perfect.
Yeah. It depends on whether you should have filed a return. So those who weren't required to file a return, whether that's because they didn't make enough or because they only get, say, Social Security payments or something like that, they don't have to file. And the IRS, I have hiccups. The IRS has a link for you to go to put your information in. if you were supposed to file a return and you didn't, you need to file as soon as possible, because that's the only way that they're going to have the information that they need in order to give you a stimulus check. Just to kind of give kind of a broad overview, the reasons why: one, they need your address or your bank account information in order to provide the money to you. And two, the amount of money that you get is dependent on those numbers. And so if you reach a certain cap, so 75,000 for an individual, you get up to 75,000, you get $1,200. But then you lose money off of that $1,200 for every dollar that you make up to 99,000, and then you get no stimulus check. And so you have to file those returns so that they have the numbers in place to determine how much you get and where it goes.
The next question is, do you have to pay the stimulus back on your taxes next year?
No. Everybody keeps saying that. No, you don't have to pay it back. It's yours. It's considered, I mean, not to get too technical, it's a credit. So they're giving it to you. It is not taxable income. It is not anything you have to pay back. I mean, listen, I understand the government is not always reliable when it comes to like giving us stuff that you think is going to be free. And then you're like, wait, you said that it wasn't going to cost me nothing. But no, in this case, the whole point of it is to help move the economy. And so they're trying to take away all the barriers that would lead us to rejecting those amounts.
So then with that said, will they withhold your stimulus if you owe back taxes?
No.
So everybody that is eligible based upon income requirements will be receiving that income.
Easy answer, yes. The reason is because the goal is that we are not spending money right now. And so the government thinks if they give us some free money, we will put that back into the economy. Whether that will actually work remains to be seen. I mean, I think the longer that people are out of work or afraid, the less likely that we're going to spend it in the economy and instead just like pay bills or put it in savings because we're scared. But that's the reason that they're, again, trying to take out all of those excuses for why we might not use it, is because they want us to put it back into the economy so that it doesn't fall.
Okay, so then let's just jump into, Keila, a general overview about, we talked about those individual stimulus, I guess, funds.
Mm-hmm.
I thought something existed for small businesses, and you said, actually, it don't. So
it did.
Okay.
So one of the big things that was touted, and there's a couple of different options out there. There's an emergency like disaster loan that the SBA was giving out. But then there was this other loan called the Paycheck Protection Program. And what it was supposed to do, if you applied for it, was allow you to retain your employees so that you didn't have to let anybody go in this pandemic. And so the very simple version is you could get up to 2.5 times your payroll. And then as long as you kept them on the payroll, and you spent the money on payroll costs or allowable costs in these different percentages, you didn't have to pay the money back. So it was a loan, but it would be forgiven if you met these requirements. They ran out of money.
Wow.
Within 2 weeks. So one of the points I want to go back to when we talk about staying ready. So the government, last time I checked, because I try to stay away from the news, but last time I checked, they're trying to determine whether or not they're going to add more money to that fund. The reason that you want to stay ready is because if that comes back up, this is a first come, first serve product. And if you are not ready, the people who are already ready from the last time and are just waiting for the doors to open again are going to get in before you. And remember that while it's not a competition, there is a cap. And they can only give so much money. So you want to be in the front of that line.
So we got a question here. Any other recommendations outside of QuickBooks to track and manage expenses? And I know you use QuickBooks, right, Keila?
We use QuickBooks, and I tell people, like, use what you're actually going to use. I've had people who come to me and they're like, I've been paying for QuickBooks for 6 months, but I don't ever use it. I'm like, then get off. Use the thing that you're actually going to take advantage of. Wave is a free option. They perform pretty much the same service. You can connect your bank accounts, categorize income and expenses. I don't use it very much, but I have clients who do, who really like it, especially at the beginning. FreshBooks is another option that works a lot like QuickBooks. I've had people tell me that they feel like it's more intuitive, and so they like using that better. But yeah, those are two other options that you can use. And honestly, if your stuff is not that complicated, put it on a spreadsheet. It's just more manual to do it that way.